Yeah, and that's kind of peculiar because I think I'm logged in under your ID.
Yeah. Okay.
So
So
try.
I guess I'm recording on my computer then.
Okay. All
Okay.
right. All right. Okay. Well, I tend to be prompt. Let me just ask. This was essentially a question and answer session with respect to DuPont ratio analysis, and I'm assuming that you've had a chance to kind of push the numbers around a little bit and may have some questions about some of the ratios. And if that's the case, why don't we go ahead and get into it? Let's see, Lauren, did you have any questions about?
I do have one.
Okay.
And you'll have to forgive me because it's been a couple years since I've taken finance, since I've been part-time, but I was familiar with just about everything, but I'm not very familiar with the cash flow coverage of fixed charge burden.
Yep.
And I was trying to do some research online, but I couldn't really find a formula or anything like that. Is there somewhere you'd recommend that I could look?
Okay, let me go to, let's see, where is Tesla? There it is. Okay. Let me go ahead and bring up. Can everybody see the worksheet, Tesla worksheet?
Yeah.
The challenge is trying to fit. Yeah, the cash. Normally, what would happen, Lauren? You would take net income after tax. And add back any non-cash charges. So anything that showed up as depreciation, amortization expense, things of that nature would be added back to net income after tax. And then fixed charge burden would be normally the principal and interest payments on contractual debt obligations, whether short-term or long-term. For our data, one of the places to go might be to, cash, there we go, sorry, okay. And what I would tend to use is the cash flows from, operating activities. If you start working down the column, okay, you can see, for instance, net cash used in operating, 60 million deficit, investing activities, etc. And you can see that what basically happened was this would be really the final number. I'm sorry if I'm rambling a little bit, but it would be the net increase or decrease in cash and cash equivalents. And that's a little bit problematic in one sense, because you say, well, gosh. We've got investing activities, operating activities, and then down here, repayments of convertible and other debt, repayments of borrowings, etc. I would tend to use that net number here at the end. There we go, right there. Okay, as an indicator of cash flow. Right. Now note that that's already taken into account all of the payments on capital obligations of varying kinds. Okay, so that's it's without having to kind of guesstimate it from the income statement. That's the number that I would probably work with.
Okay. And
so what it basically says is they weren't able to cover all of their obligations during the course of the fiscal year. Okay. Does that help?
Yes, it does.
Okay. All right. Let's see. Other things, other questions, issues.
How about projections? Everybody okay on projections?
Yeah. Let me deal with that on a different. I'm going to put together a brief video on the mechanics of doing that. One of the reasons why we're looking at these ratios, including particularly the efficiency ratios like accounts receivable turn, inventory turn, long-term asset turn, is that we're going to use those as a way of projecting what the net cash requirements are going to be. Basically, if to get a little bit ahead, what we'll be doing is starting with projecting the top line on the income statement, the revenue line, and then using the past relationships between revenue and asset values as a way of projecting what those asset values will be. And for projection purposes, we're going to just clamp existing capital sources at their most recent values, that would be 2017, and then have a plug figure at the bottom that would indicate what the net cash need would be. I'll get into the mechanics of that in a different video, and we'll be getting to that. Let's see, somewhere around June 11th on the schedule. Okay, it's a ballpark. It's a back of the envelope kind of calculation. Ideally, in the situation, you'd have access to, if you were the CFO particularly, you'd have access to the full chart of accounts, and you could render your projections on a bottoms-up basis, just building from the details of each of the operating entities or sub-entities. We're going to have to do it from the top line. Okay.
So that brings on a question. So
yes,
we're supposed to be doing the ratios and doing the future projections?
No, the projections are coming up until after we get through chapter 4 and get to June 11th.
Okay.
All right. So that's basically what that's going to be. Is if the premise is, if nothing changes fundamentally in Tesla's picture, knowing what the historical development of the numbers looks like and what the internal relationships between the expenses, assets, revenue, and so forth have been, what do you think would be the, if they changed nothing and continued operating in their current mode, what would be the outcome for 5 years? What do you think would happen? And that means we'd start with the revenue projection and then work from there. I'll have a note in the video on that. That should be helpful. But that's coming up quite a bit later. Okay. Other questions about the ratios, calculations at this point?
Yeah, I have a question.
Yes.
When we talk about cars, you know, we can lease. So how does leasing come into like sales, and do we use that in any of our ratios? How does that show up?
Yeah. What you'll see if you look at the income statement, Tesla breaks out their revenue from the automotive side in terms of both revenue from sales and from leasing. I'm not sure of the details at this point about how they are capturing those lease numbers. I think they're capitalizing the future cash flows on each lease in present value terms, and that's what they're showing on the income statement. If you wanted to know the details, you could dig down into the 10K statement. And since leasing really is not that significant a factor until 2016 or 2017, those are the 10Ks that I'd probably look at.
Yeah, I bet they take it all in the current year, right?
Yeah, it should be capitalized, you know, future lease, net lease, or rather gross lease revenue for whatever terms they're leasing on.
Yeah, like it's a sale. Yeah.
Like it's a sale. Right, we treat it just
Because
like
they take the cost in the current year, right? So they're going to want the revenue in the current year.
Yep.
Yeah.
Yep. And as you can see, it's been growing as a fraction, although it's still a relatively small fraction. And so they don't have the same problems that Ford and General Motors and Chrysler, to a lesser extent, have heaped up for themselves in terms of aggressive lease sales. Because in the automobile industry, one of the ways of thinking about a lease is that essentially you're capturing, you know, you're trying to capture the revenue of a new car sale. The problem is the new car is going to come back to you in 2 years or 3 years, and you're going to have to resell it. So you're going to begin competing actively with your new models at that point. So it's kind of like selling futures in a way. Okay. Let's see. I don't know. Did that answer your question?
Yeah. So pretty much, I was just wondering, when we think of in terms of sales, it's actually the combination of the sales that they show plus the leasing.
That's correct. And if you look at total revenues, it includes not just the sales, the leasing, but also the energy generation. This is the Solar City side of the business, and miscellaneous services that they're providing to their automobile customers and their Solar City customers. Okay. So a total of $11,758,751,000 according to the accountants. Okay. All right, let's see. Back to where we were here. Okay, so are there any other questions or thoughts with respect to the ratios or calculations for Tesla?
All right, now.
I had the question about the cash flow coverage. I know Lauren asked about this, but that value that you showed us, is that the actual value of the cash flow coverage, or is that just
that's actually the net after all of the various fixed charges have come out. So you notice, for example, Tesla has a pretty wide range of activities on the finance side. You'll notice, for example, that they have on the operating side, they're still they start off with a rather large negative cash flow, which is not really that cool, and mostly it's because of the net loss. Then they have some other adjustments to make. But if you want to look at it and say, well, before taking into account capital costs, they're losing about $60,654,000 in terms of cash flow. And that's one of the things that's difficult about Tesla. This is a company that's operating both at negative earnings and negative operating cash flow. Unlike, say, SpaceX, which I understand is both earnings positive as well as cash flow positive. So in one sense, the cash flow coverage is probably not as meaningful a ratio as far as Tesla is concerned. Their biggest issue is one of their biggest issues is trying to figure out how are they going to raise the money to cover the net operating deficits that they're generating.
Yeah, it's like the federal government from that standpoint, right? We know we're operating at a loss. We just got to figure out how to get enough hands on enough cash to pay the bills, right?
Mm-hmm. Let's not go there.
No. You don't open that can of worms? We could be here all night.
Yeah, the trustees' reports, the actuarial numbers are truly scary. Okay. Right. Other questions here? We'll get to the base case and the improved projections subsequently in June. So I would not worry about those at the moment. Okay. Anything else here?
Not right now.
Okay. Let me show you then one other thing. I think you can see it. The DuPont financial ratios for BSG. Is that up on your screen? No?
Yeah.
It is?
Yeah.
Okay. What you'll notice, I've gone ahead and put this together for you to use when we're working in the simulation. You'll see all these things that are sitting out here already calculated by formula. Basically, what you'll need to do as we complete each period in the simulation is to plug in the data for net revenue, cost of goods sold, SG&A, interest, taxes, and then all the various margins are calculated. You'll have to put some information in about the assets, the liabilities, and then what will happen is the ROA, the ROE will be calculated down here for your particular company. So it's a framework we're going to use again when we get to the simulation to help you manage what's going on in your company as the simulation progresses. Okay.
Dr. Whitehouse, are you supposed to be showing us something on the screen?
Is it not showing?
No,
blank.
I still see the Excel spreadsheet.
Okay, let's see here. Oh, you still, okay. Let's try that.
Oh, there we go.
Is that it? Okay, sorry. You know, when it's happening, I'm showing things, I'm changing things on my screen. I forget I have to click on share it again. Okay. All right, so now this probably makes better sense, yes?
Yeah.
Okay.
All right. So when it says BSG, right, that's the simulation we're going to be doing the second half of the class.
That's for the simulation. Yes.
Right. So this is no longer Tesla. This is for the simulation.
But it's one of the reasons why we want to get into the DuPont ratio analysis now, is because it's going to be part of the perspective. They'll ask you to be, so for example, the net profit margin, total asset turn, leverage are all calculated for you after you've entered the basic financial statement data. And there's some sparkline charts out here that will show changes in trends without you having to just create a graph for those. And then a couple of other pieces. And basically, we'll start with this in the introduction to BSG. But all the data for year 10 are, so to speak, already in the bag. You're taking over the company beginning with year 11. And so these are the baseline numbers for you to use as a reference when you're evaluating profitability, when you're evaluating your asset turn, and your leverage. Since you will have a responsibility for managing the structure of the balance sheet, that becomes material. Anyway, so that's one of the places where we're going. Okay. So let's see. Anything else at this point?
I had a question. The bottom of the spreadsheet said there are other ratios that you think are instructive.
Yes.
Do you have any advice or hints of which certain ratios you're looking for?
Well, what you'll find, the folks who do this kind of stuff for a living, the industry analysts, who get tasked with looking at competitors within a particular industry, tend to develop a stable of additional ratios that they find instructive. And what I would suggest is, particularly, and let me go back to that worksheet just a second. Here we go. Okay, and share that. Here we go. All right, so here's what I would be thinking about. Is this walks down the income statement at least 4 major steps. But one of the places where efficiency begins to move is when we start looking at receivables or inventory or long-term assets. And one of the breakdowns that people will do is to say, let's look at long-term assets and say, well, now, I wonder if it might be possible to find what the dollar values for major pieces of Tesla's business would be. So, for example, their battery manufacturing plant that they opened, is one piece. What kind of turnover are they getting on that particular investment? My surmise at the moment is that if you could break out those numbers separately from the 10Ks, that you might be able to, you probably would see it's relatively underutilized at the present time, that they have excess capacity that they're going to have to be working off as time goes by. And you would want to see a favorable trend in that particular ratio. So again, it's a question of going down and digging a little bit into the 10Ks. If long-term asset turnover deteriorated sharply, let's say from 2015 through 2017, I probably want to go sleuthing a little bit in the 10Ks and figure out why. And so in one sense, what we're doing here with this analysis is sort of the first level of the detective story. What are the basic clues telling us is going on? And then if something seems to be either trending positively or trending negatively, I might want to go a little bit deeper in terms of detail on those particular items to see if I can figure out what's happening. I know it's kind of a general answer, Jacob, but does that address your question?
Yeah, I think it does. I'll just take a look at the 10Ks and see what I can come up with from there.
Yeah, I wouldn't spend a lot of time and sweat on it, quite honestly, unless you saw a marked trend or a marked deterioration or a marked improvement in one or another of the ratios that suggests there's a reason to dig a little bit deeper and look further to understand better what's going on.
Yeah, that's what I always look for. Significant changes from year to year, right? Either for good or for bad, right?
For good or bad.
Yeah, right.
Unfortunately, we tend to focus on those negative surprises when in reality, we learn a lot more from the things that are happening that are positive if we pay attention to those.
Yeah.
Okay. Let's see. Okie dokie. Any others? Any other questions?
I had another question, but it's kind of outside of the ratios assignment.
Yeah, go ahead.
So I don't want to jump if we're going to stay on the ratio. I was just wondering the PowerPoint slides that are due Monday, I think. I guess I haven't seen too much instruction on exactly what that should look like yet. Is there further instruction to come on that? Or?
Well, let me, what I think I would want to see is going to be certainly down through these and any other things that you think are instructive. The actual ratio calculations for Tesla. And then, as you'll note if you look at the expectations for this portion of the assignment, that asks you generate at least 3 graphs that illustrate trends that are underway at Tesla that you think are important for your reader, your audience to apprehend or to understand. Okay. So what I would be looking for would probably be one slide. I think you could manage it on one slide reasonably with the basic ratios, and then two or at least 2 or 3 more slides with the graphs of key trends that you see underway or key events that you see happening in the numbers, and then your assessment of Tesla as in terms of its profitability and its solvency and its liquidity.
Right, and that's one set per team, right?
That's correct. One set per team.
One set of PowerPoints per team.
Mm-hmm.
Just to repeat that, you said one slide of the basic ratios, 2 to 3 slides of what you see with the numbers, and then you said 2 slides of what you see. What was the part of after that? Sorry.
Okay. Well, let me clarify. One slide that you would simply present the basic ratios. Oops, son of a gun. I didn't mean to do that. Okay. One slide where you'd present the basic ratios. And that's almost in the way of an appendix, but the slides that would be most important would be the graphs that you think illustrate either key trends that are underway or sudden deterioration or sudden improvement that you think is meaningful. And then your discussion of your appraisal of Tesla as a financial entity. What kind of shape do you think they're in?
Remember, we're going to reuse these later when your team does your overall assessment of what's going on.
Right.
We're going to use these slides later.
Yeah, that's why once they come in, we'll give you some feedback on the slides for that particular section. So you have a chance to either add, amend, improve, whatever. Okay.
Good question.
There we go. Okay. Okay, anything else we need to get into at this point?
One of the questions I had for when we look at fixed assets,
Yes.
like our long term,
Mm-hmm.
we look at the PPE for it. I know that typically that's our like long term asset, but when you said for us to project it, you said 80% was fixed and 20% was variable if there was any new intros. Do we actually apply that to ratios at all, or do we just say?
Let me go back and look. I need to look at that document again. I want to make sure that it's going to be usable for us for Tesla. The first thought was that it was, but I want to take another look at it before we get closer to the base case projections.
Okay, but for the ratios, we don't assume, or we assume that the PP is all fixed. There's no variable in there.
I'm sorry, say it again, Rebecca.
That the fixed assets for the plant, property, and equipment is actually fixed. There's nothing that's changing.
Okay, well, what we'll probably end up doing is looking at the long-term asset turn and using that value to project what the fixed assets would be given a particular revenue base in each year. Does that make sense?
Yeah.
Okay.
But I'm just saying for the ratio part, we just assume that they're all fixed. There's no change.
Yeah. Mm-hmm. Okay. Any others?
Okay. We good? Any other questions?
Okay. Well, have fun with this. Tesla is, as I've mentioned, I think in the video, a different kind of animal from a financial analytic point of view. And one of the questions, I'm sure, as you look closely at what's been happening in terms of the cash flows, especially, where all that money is coming from. You'll notice that there are major infusions in pretty much all of the years, some larger than others. And, one of the questions is who's fronting that money? And that's I think a useful one to ponder a little bit.
I wonder the same thing about cybersecurities or cyber currencies.
Yeah.
Who's pumping all that money in there, right?
Yeah. Even the founder discovered that one of the founders discovered that they can be conveniently stolen.
Yeah.
I think the founder lost 7,500 bitcoins.
Really?
Yes, in a fraud. Yeah. Somebody managed a way to hack his account and get his private key and took all of his bitcoins.
Yeah. What, 8 to 12 grand a Bitcoin? That's a lot.
Yeah. No safe place in the universe.
Yeah.
Yeah.
Exactly.
All right.
Okay,
Well,
I think we're good.
Okay.
So I'll since I recorded this, Frank, I'll post this on YouTube for everybody else and send out the link. And then tomorrow we have a meeting at 7 o'clock. We're going to talk about, I think, strategies and values for Tesla.
Vision, mission, goals.
Yep. All of that.
Yep.
Kind of look through that part of the case again, and we'll just kind of do the open forum, take questions again.
Mm-hmm.
So I didn't see a meeting request for tomorrow. Was that out there on an email, or was that in the BSG online?
That was in the schedule. I'm going to send out the meeting announcement right now. I'm going to schedule it and send it out. Okay. I thought I'd wait till after this meeting so people aren't clicking on the wrong one, trying to join tonight's meeting with tomorrow's link, that kind of thing. So you'll get that in about half an hour, probably, in your email.
Sounds good. Thank you, sir.
All right. No problem.
All right. Cool.
All right. Well, everybody have a good night. I'll talk to you later.
You too. Thank you.
All right.
See you.